Futures trading involves substantial risk of loss and may not be suitable for all investors. Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the suburbs of Chicago. Today is Friday, November 7th. Big day in the markets and outside of the markets. Big 3-year-old birthday here at the Sloup House, so a lot going on. We'll jump right into the charts, though. We've got the December corn futures pulled up here. And again, this is on our Blue Line Edge trading platform, which is free and complimentary to clients. Great desktop and mobile platform, easy to use for charting or just monitoring positions or live data. Great tool there. But here we got December corn, and really we've just been sideways. This probably just sounds like we're beating on a dead horse here over the last 2 weeks, where we've been treading water against resistance. The 200-day moving average is up here. It's not on this chart, but it is up there. You've also got the 50% retracement as well. So the inability to get out above there just led to a little bit of selling pressure here in the back half of the week. And we broke down a little bit in today's trade below yesterday's lows, which is a little bit of a caution flag. But I think the fundamental and technical backdrop for that matter still remain pretty firm. We've got the 20-day and 50-day moving average continuing to work higher. So although I do think that corn can come back in a little bit from these levels, I don't know that the bottom is going to fall out. A break and close below these two moving averages. There's also some trend line support that comes in there. I think that's where the cause for concern would be. But so far, we're holding those, so hopefully we can continue to defend those and mark higher lows off of that to start next week's trade. Now, one of the things we talked about earlier in the week was deciding what hat are you wearing. Are you a trader or are you a hedger? Earlier in the week, we talked about hedgers being more proactive on the recent rally that we've seen in the grain markets, and this is why you get these little bit of pullbacks. And you've just got to be proactive. You can't be paralyzed by price, especially looking at the seasonal tendencies for corn over the last 20, 30, 15, 10, all the longer-term price averages for corn. Not a great time to be optimistic on corn. I'm still optimistic longer term, but again, there are some headwinds that the market is facing here in the near term. For the week, December corn futures were, 4 3/4 cents lower, so not a whole lot going on there. January soybeans, they were up 9 cents today, 9.5 cents, which put them a whopping 1 3/4 cents higher for the week. That after trading in about a 33.5 cent range. Big breakdown yesterday. It was nice to see the market kind of hold its own in today's trade and get right back to where that breakdown point was yesterday. We outlined that as 11.12 to 11.16 in this morning's report. Finished pretty darn close to that, so not a real conviction closeout above there, so it'll be really interesting to see what Monday or Sunday night brings. I'm still a little bit concerned that we do see some more price pressure here in the near term. I'm optimistic longer term that we can continue to stair a step higher in these grain markets. But we had such a big run on the back of a lot of headlines where it's what are the headlines going to be that's going to propel the market from here? We've got a lot of good news out in front of us. It wouldn't be terribly surprising to see some of those headlines give way a little bit and maybe see a reversion trade as far as price goes. And looking at where those pullbacks would be, you're looking at this breakout point, 1185, 1190 areas, potential support below that, and things maybe start to turn a little bit more bearish from a technical picture. But so long as we can defend that breakout point, again, that was resistance really through much of the year. I think the bulls remain in control. Again, break and close below there, and you're looking at this gap right here, 1060, 1065 area, and then you've got moving averages coming in below there as well. So those are things to be aware of in the soybean market. Again, if you want to trade this market with just outright futures, that's great. You can certainly do that. We've been working with clients throughout the week on trading the future side and then hedging it with some option strategies. So if you're interested in learning more about that, don't hesitate to reach out to our trade desk. We're always ready, willing, and able to help. Now, moving over to December wheat, just got shellacked yesterday. Gave back basically all of the gains from the first 3 days of the week all in one session. And then we broke lower today, which opens the door for a potential retest of these moving averages, the 20 and the 50-day. That's really where the breakout move started back on October 27th. And just below there, you've got a little bit of a gap. So not a great day for wheat. We would have liked to see the market hold 535. But it didn't, and you saw just the selling kind of snowball and accelerate. Now, what we talked about earlier in the week, though, when we got up towards that 550 level, is just trying to be able to capitalize on a good move. The wheat market, if you've been trading the wheat market at all over the last several months, you haven't had an opportunity like this, so it's important to capitalize when you get moves that go your way, whether that be just taking off exposure or just protecting the exposure. So there's lots of opportunities when the volatility starts to pick up here. You just got to be able to capitalize on it and maybe not get so married to one side of the trade. Now, over on the livestock side of things, it was certainly an interesting week. Saw a little bit of consolidation in today's trade. Some gains, live cattle, feeder cattle posted small gains for the week, though still pretty stout losses. December live cattle today, $2.57 higher. Before the week, that was $8.32 lower. January feeders gained $3.97 today. That was still $12.32 lower for the week. So just lower highs, lower lows as funds continue to liquidate their exposure to this market, which has been a big concern since the administration came out almost a month ago, basically telling us that they want lower beef prices. And we talked about this before. If you're a money manager or a fiduciary, someone in that role managing other people's money, you've got to go explain to your clients why you're long the market when the government's telling you they want to lower those prices. Fundamentally, still pretty darn stout. You'd think that November feeder cattle would be able to hold here in the next 2 weeks. That's when the contract expires. The CME feeder index still above the market. Live cattle, cash trade softened up a little bit this week, but not terribly concerning, knock on wood. So I think there will be some opportunities when the dust settles, but it's about being patient and keeping that powder dry for when that opportunity does come. And then wrapping up with the December lean hogs. Just kind of lingering down here. We broke below the 200-day moving average to start the week and really couldn't get much going at all this week. We tested the 50% retracement, basically the middle of the range from this year. That's going to be basically the last line in the sand for us here. Failure there and continued pressure is likely there. Volatility is low, so again, using options, whether as an outright position or to hedge futures, a good strategy in my opinion in this type of environment. So I think hopefully we can get the hogs going at some point, but it's been an uphill battle and swimming upstream. So again, managing that risk, I think with options is certainly something to keep in mind. So that's what we're looking at heading into the weekend. If you have any questions at all, don't hesitate to reach out. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.